It's less than 4,000 companies listed on the public stock market, which is a huge deal because the stock market is probably the number one thing for the average American to have a retirement set up. What's going on, y'all? Happy Monday. Welcome back to Monday Market Briefs. This is brought to you by the Capital Alliance Network. I am your host, Tariq Collins, and we're getting into all things private equity, private credit in the private markets, period. Listen, today's story is like no other. You have a 401k, a Roth IRA, all these SEPs IRAs if you're a business owner. All those plans are invested with the public stock market. So if there's less companies going on the public stock market, there's less money to be made. How do we increase our money for retirement, which is something that's very important, right? A survey was done by BlackRock firm that says there are more people concerned with running out of money in retirement than they are with dying too soon. Think about that. So now what's another way for you to compensate or make up the money that you're lacking in the public markets? That will be to invest in the private market. But now we have to basically make the private market available for the average person to be able to invest in that's not an accredited investor. And that's what Robinhood did with Robinhood Venture Fund 1. In the New York Stock Exchange, under the symbol RVI or RV1 is Roman numeral, with an expected $25 per share buy-in. So every share is going to be worth $25 for you to buy in at that share. That automatically puts you in the private market game. The fund will be provided to a set of private companies. And with Robinhood already looking at Airwallex, Boom, Databricks, Mercor, Aura, Ramp, and Revolt as their initial private investments going on with this fund. And they're going to be adding companies over time. One major company that everybody might know of is Stripe. They're trying to add to their portfolio as well. The fund will be accessible to all investors with no accreditation requirements, investment minimums, or performance fees, unlike traditional private market vehicles. However, that's a private company that they bought into, and Jersey Mike sold some of its shares and equity into the private equity market so it can expand its reach. Take the sandwiches from the U.S. to start taking them overseas, and then they're going to create an exit by taking it public, which will allow Blackstone to get its money back from the investment that they made in there, right? So retirement is a big deal because we need to ensure that Americans have enough money to retire when they retire. This is a government problem and a problem that can be solved from the private markets. The answer to this is more of us need to be invested inside the private markets, all right? Now, we already broke down how the institutions come in there and invest. Why is this important to you? Because I already told you less companies are going up on the stock market. So as a regular investor, you need to ensure that you kind of get the knowledge from this channel or any other channel that's out there informing you, but make sure you stay tuned in this channel. Like, share, subscribe. Let me get back to it. About what's happening in the private market so you understand where to invest your dollars for your money to grow. Don't just rely on the stock market as less and less companies are going public because they're staying private for longer. Your average next door neighbor could be starting their own private equity firm and be raising dollars via a fund that you can be a part of, or you're starting to see individual investors do individual sponsored deals, and they might be looking for investment dollars for individual deals that they run across and that you could be a part of to make a way on your investment. Now, the thing about the private markets is this is not the stock market. So this ain't, let me buy 100 shares of Amazon. Oh, this has went up. Monday, I'm cashing out, right? The purpose of private money and the reason why it's been held up with institutions is because it's a longer deal of investment. Typically, the average investments in the private market is a 5-year play. They take about 5 to 7 years to actually grow said business, and then they're looking for an exit. So what does that mean? Well, if I have a private equity firm, I'm going to raise dollars in my fund. Let's say I'm raising $1 million. Out of that $1 million, I probably have an investment thesis for me to buy boring businesses, what I call your everyday cash flowing businesses, so your blue collar businesses. That could be everything from HVAC, plumbing, different businesses like that. So I will take a piece of the $1 million fund and buy up multiple of these businesses. And the purpose of what I'm trying to do is I'm looking for founders who's ready to sell their business because they either want to retire or they want to get a cash out of the business and ready to do something different. So I just ran across John. He has a plumbing company. I just bought his plumbing company, let's say for $1 million, right? I use a piece of the equity, which the money that we got, let's say I give $500,000 of cash, and then I'll finance the other $500,000 from a bank. As soon as I take over the business, this is a leveraged buyout. This is what they call the LBO, because I'm going to buy out the whole business. Soon as I take over his business, I'm looking to put management in the business. I'm looking to grow the business. I'm looking to scale the business. So if it's a regional business, we're looking to go national. If it's small, we're looking to go regional. Then we're looking to go national. So we want to increase sales so we can make sure we increase money. We want to make sure we put management in place so that they can run the business on a day-to-day, because I'm the private equity investor. I'm not going to be in the business running it, but I'm going to oversee and make sure that it's running and give them the capital that they need to grow. They need to make sure that we hire talented people, A players, whatever they need for marketing materials for us to be visible and branded out here, so know that they can come like us and trust us for this business of plumbing. And then for us to put the right management in place for them to actually grow and scale this business. Then what's going to happen is I bought this business at $1 million. And when I bought it, it was already making, let's say $1.5 million. And we was net profit about $300,000. Well, 5 years from now, after we have invested in the business, we have grown the business, we have put all the necessary things in place, the business went from 1.5 to $10 million in revenue. And now we got $3 million profit. As a private equity firm, I need an exit for my investors, which means we need to sell this business. So either I'm going to find another private equity firm to sell it to who this deal makes sense for them, or I'm going to find a strategic buyer, another plumbing company who can add, who they can add this business to their portfolio and merge this, or I'm going to list it on the public stock market so I can get my initial dollars back out of there. Now, remember, we bought it at $1 million and now the cash flow is $3 million. So if let's just say I 3X the $3 million, right? Then I'm going to sell the business for $6 million, which means I've made $5 million because I invested $1 million. That's the game. That's what's happening every single day all around you. Companies is being sold, companies is being bought, and people are listening to be done. So because these companies are not necessarily going public, stock market, your way to make your investment will be to invest in these private deals. Right now, as we talk, there are a slew of baby boomers retiring, and their kids don't want their businesses. The people who work in their business don't want to take over their business. And the baby boomers want an exit. They want to retire. They want to cash out. They want their money right now for the hard work that they put into these businesses, your everyday brands that you like. It could be the shoe store. It could be the cleaning company. It could be the car wash. It could be the plumbing company. It could be the lawn care company. Any company you think of, the baby boomers is waiting for an exit. And they're selling to private equity because private equity is coming and buying them up, or they're doing to a strategic buyer. So you want to make sure you align your pockets with these types of institutions and dollars so that your investment can grow and you're not just relying on the stock market. So Robinhood has done a great job of that. They're the first to do it. I'm sure you're going to see more and more firms or brokerage firms come out with their own fund where you can buy shares into this fund and they go out into private markets. Or if you know your friendly neighborhood next door neighbor that just started their private equity firm, you can tell them about ways that you can invest if you're an accredited investor or to become an accredited investor. Well, guys, listen, caps our story of Robinhood and their venture fund one. I hope this was informative on how the private equity market works and how you can be a part of it and why you should be a part of it. More and more people are not talking about this, which is why we're talking about it, because you need to know what's happening with the world and your money and your finances and the best way for you to invest your money and be diversified and not just singular, right? Don't forget to like, share, subscribe, and leave a comment and let me know what you think about Robinhood Fund 1 Venture Fund. And let me know if you think about you going to buy some shares or not. Like, we want to hear feedback, how good we're doing, and what else you want to hear about in the private markets. If there's a question or concern that you have, we're here to explain it. So I'll see you guys on the next episode, on the next Money Market Briefs.